So if you're experienced in the market or still new, ICT is honestly a very important strategy to know, especially with the concepts that come along with it. We have an SMT, which is also known as smart money trading, fair value gap or inversion gap, which is pretty much just an imbalance in the market from a quick and fast move. And we have buy side or sell side, which are previous lows that hold a pool of liquidity that are waiting to get retested. So if you don't know what any of these terms mean, don't worry. I'll explain them in just a sec. So starting off, let me explain exactly what an SMT is. So NASDAQ and S&P are two correlated assets. They should always follow each other, but at times, one makes a higher high and one makes a lower low, and they become displaced in the market. For example, like NASDAQ over here has a low coming to a high, but on the other hand, ES has a high coming to a low, which shows that there is a divergence in the market. If we see a structure like this get put in place, then we know that since this is tapping the highs and this is tapping the highs, that either NAS or ES will start a downtrend. If you see an SMT like this, where on NASDAQ it's hitting the highs to the lows and ES is hitting the lows to the highs, then you can expect a retracement to an uptrend. So SMTs are very important to know because they can also be a confluence to help you on your entries. And the more confluences you have, the more likely your strategy will play out. So let's go on to the next concept. Fair value gaps and inversion gaps. A fair value gap is pretty much when there is a strong push in the market, leaving a gap that hasn't been fulfilled in the market, meaning that price has no choice but to come back to retrace it because there is some area that hasn't been filled. In that case, fair value gaps always get retraced before they continue their move up. Inversion fair value gaps are exactly the same as a fair value gap, but instead of it getting retraced, it breaks right through completely, showing that there was a strong imbalance in the market. So let me show you an example of what I'm trying to say. So fair value gaps and inversion gaps can happen on any stock between NASDAQ, S&P, Forex, crypto. It can happen anywhere because it's simply a gap that hasn't been filled in the market. For example, fair value gap right here. We can see that we're in an uptrend, and right here we made a strong break, which means that the market has to come back to retrace it. And same thing over here, retrace with the fair value gap. An inversion gap is pretty much a gap like this, but instead of it getting retraced to continue downwards, it makes a strong break right through as if it was never there. Inversion gaps do get retraced sometimes, but don't always bet on it. So for example, say you have a candle here and a candle here, and you see a little gap in between. What you would want to do is draw a fair value gap. Now you can expect price to come back up, hit inside the zone, and continue downwards. Or on the contrary, this turns into an inversion gap, and when we're coming back to retrace it, instead of stopping and going back down, we break right through it, come back to retrace, and continue our trend in the opposite direction. So finally, for our last concept of the ICT strategies, we have buy side and sell side. So when a stock is trading, it always trades inside of a zone. When we're inside of a zone, this means that we are going to have a buy side and a sell side. We can mark these out by the previous swing highs and swing lows of each stock, which can be found on any time frame between the weekly to the 1 minute time frame. Buy sides and sell sides hold liquidity pools, meaning that there's 100 people in this area, for example, that have buy limits and sell limits or stop losses and take profits. And when this stock comes in to hit all these big pool of people, there's a big chance that this pool is going to trigger the stock to reverse and continue downwards. And it's the same thing with sell side. A bunch of people over here, 100 people for example, that are waiting with buy stops, sell stops, take profits, sell limits, and so much more. So when the stock comes into this area and gets triggered through all of these targets, there's a strong possibility that we just continue up and we continue our uptrend again. So I really do hope you enjoyed this video. I hope it made sense to you. I hope you got some knowledge out of it. And if you have any questions, let me know in the comments. And I hope you have an amazing day.